This man that you see on screen, our special guest today, is the man that achieved the highest payout in all of 2024. We're talking just the highest single payout in all of 2024 for Hydra Funding. What was the high mark? I know the withdrawal amount was 45k.
So 50% increase on the total account. So it was $150,000. Yeah, the pullout was like about 45k.
So use prop firms to actually diversify risk into other avenues, other business ventures. So I definitely think that using prop firms as a leverage and being aggressive is the way that I'm kind of seeing it.
One of the most important things I've learned is that you don't set your trades, and it's kind of a fundamental of trading based on how much you can gain. And that's like the OG beginner mistake that we all made. The trades should always be based on how much you're willing to lose.
What's going on, guys? Welcome back to another episode of the Challenge Accepted podcast. And today's episode is a very, very special one because we have a special guest on the show today. We're going to let him introduce himself in a little bit. But just a little preface, this man that you see on screen, our special guest today, is the man that achieved the highest payout in all of 2024. We're talking just the highest single payout in all of 2024 for Hydra Funding. And we're going to talk today all about how he trades. We're going to talk about how he achieved the payouts, and we're going to break down a little bit of his strategy if possible. And we're going to take a deep dive into this man's mind. And without further ado, I'm going to let you introduce yourself a little bit to the community. Please go ahead.
Absolutely. Well, it's good to meet you guys. My name is Sawzer Basha, and I'm very excited to be here. I've seen and known you guys, before you knew about me. I watched a little bit of your podcast, obviously through Cameron Foos. DY, I've been kind of like, since maybe 2023, kind of watching a little bit of your content and collaborations with him. So I'm very excited to be here and talk to you guys.
Really appreciate you taking the time to be on the pod today. It was a little bit of a coordination thing. It's almost Christmas. We got 3 time zones. I'm out here in Asia. James is in South Africa, and you're in...
I'm in Jersey, so Eastern time. Yeah.
So Eastern time. So we got a wide time spread here. But I'll let you guys know, Sawzer actually took his $100,000 funded account up to 100 and what was the high mark? I know the withdrawal amount was 45k. What was the highest profit mark you took it to?
So 50% increase on the total account. So it was $150,000. So I took it up from 100 to 150, and the pullout was like about 45k.
So
Wow.
He had a 45k withdrawal. After the split, I believe he ended up with around $34,000
$34,000,
net
that's right.
to net to trader, and that was our highest payout of the year by over $9,000. So it wasn't close. Our highest payout before that was just around the 25k mark. So he surpassed that by quite a bit, and coming in at the end of the year. So I told our partnerships manager, like, hey, we got to get this guy on if he wants to be a part of the podcast and kind of talk about this a little bit. So I do have some questions for you regarding, how you got here. But first of all, I want to ask, is this your largest payout with any prop firm, or, have you done others before? What is your experience like with the prop side of things?
Absolutely. So this is my largest payout, but it doesn't begin this way, right? I started trading with Hydra years ago, and I blew up a bunch of accounts, right? Because I just didn't know enough. I didn't have the experience, or I didn't experience enough pain to know how to manage my risks. So I blew up a few $100,000 accounts before this. Just been kind of practicing, studying as much as possible, improving my methods until now. So, I felt ready, so I went headfirst into it, and I guess I was.
Yeah.
So tell me a little bit about your process, right? Like I think all funded traders do go through this process of blowing up accounts, and especially finding out kind of how difficult actually trading a funded challenge is, having those risk parameters in place that almost force you to manage risk in a certain way. And also it's a lot of pressure when you start to get close to that drawdown limit, right? Like I think I've blown up like 3 accounts in the past when I first started. And anytime you get close, I think for a few of my challenges, I didn't even finish trading it. Like I was maybe like less than 1% from the max drawdown. I just stopped trading and I was like, I don't want to fail. It's like I just stopped. So talk to us about that process, right? Like how did you go from, maybe the blow ups to passing, and then, was it like was this the first account you passed that you immediately managed to get profit in, or was there still some process there?
Well, I would say the reason why, like you mentioned, when you get close to the drawdown, emotions start to kick in. And so those can override your logical thought process. You should have a thesis, you should have a system of trading. And when that system, it incorporates into it a certain amount of drawdown, like, okay, so I might go 2-3% below my entire account, but eventually it's going to go my way if my thesis is solid. So initially, when you start trading, you really understand that, right? Emotions kick in, you get a little excited or you get a little nervous, and then you start making funny decisions. So a big part of it is being able to detach from that and just stay extremely logical in the process of trading.
Yeah. What I want to ask, Sawzer, what are you trading mainly? What assets and why? What do you? Yeah, I'm sure a lot of guys are interested in that.
Yeah, so mainly I trade sometimes a little bit of forex indices, commodities like oil, gold, silver, but mostly I'm in cryptocurrency because when I started trading, it started initially with cryptocurrency, specifically because years ago, one of the first like huge bull markets that took place in Bitcoin, I was watching,
Sure.
and I saw all these people making money. I saw people lose money, but I just realized that the profits on that are a lot more aggressive and they happen a lot more quickly. So my thought process was like, it's a lot more stable and predictable to trade these other assets. But at the same time, if I figure out this other thing, I'm potentially going to make a lot more money and do it a lot quicker. So my focus has been on that just because the return on my investment, I always saw cryptocurrency as bigger. A lot of people, I think they see it as kind of like a joke, like it doesn't really have a lot of function or use value in the world. Um, I think that cryptocurrency it's powerful, and I think there is a future for it, and there's a lot of use for it. So that's really where I dive headfirst. So that trade that I closed out that you guys are talking about, that was, if not entirely, mostly Bitcoin.
Sure.
Yeah,
And
because
are these?
I believe I did take a quick look into your metric history on the account. And I noticed that it was mostly Bitcoin trades on the account. So what was that like? Did you manage to? Was it like? It sounds like you personally, it's almost like a mix of personal interest, passion. You sound like you're in the crypto space. You believe in it. So it's almost like you were able to take that interest, and then we started to have this run up, right? Did you manage to kind of capitalize on this recent run up? And if you did, how did you do so? Was it like planned? How did you go about doing that?
Absolutely, it was planned, right? Your plan A should never be a miracle. Like you shouldn't hope. So I checked one of my digital wallets, MetaMask. I checked when it was actually like open when I started trading with it was about 4 years ago. So I've been watching this space ever since. And one thing that I realized is that it moves in cycles. I mean, the whole global economy in a sense moves in cycles, but everything is kind of a pattern. So the market is a pattern, the price action is a pattern, the way things behave is a pattern. And so too are the cycles, right? And Bitcoin goes through cycles every about 3-4 years. So when I started looking into this and kind of trading, getting like just my toes in the water, I realized that, initially back then I didn't make much money, but I noticed that this pattern repeats. So if I was to study up on it and be ready for the next cycle, then I could take advantage of it. And that's pretty much what I did, where I saw the signs of, okay, well, I think this is about to blow up. This is going to go really high. So, I kept my eye on it. I engaged with it, and I pretty much set myself up before people started talking about it to catch that wave when it does. So it's not, and definitely planned. It has to be planned. Everything in life, every strategy, you have to have some sort of parameter, some thesis, some strategy applied. So yeah, it's not luck.
Were these day trades or more swing trades on the account? Because obviously with Hydra, swing trades. Okay.
Definitely, yeah. Yeah, I tried day and scalp trading. It's definitely not for me for a lot of different reasons.
Sure.
Just so much like
Team
the
swing
risk.
trading, let's go. James on an island
Yeah,
over there by yourself.
what's your style? Like, do you guys usually day trade or swing trade?
I normally day trade. I normally day trade myself. Yeah.
Yeah, I was also day trading, scalping a lot, trading lower time frames, and I think this year in August I switched over to swing trading. And I am never going back to I'm never
Yeah.
going back to scalping. Like I think the biggest thing for me has been I don't know if you maybe noticed this is actually my consistency and my psychology has been way better swing
Oh, yeah.
trading. I don't know, maybe it's because things just move slower. I have more time to assess, like take note of my positions, what I'm trying to get in, set alerts, and I feel a little bit more prepared. Whereas like a lot of times I feel like when I was trading the smaller time frames, the decision making has to be really, really quick. Like if you don't, click the button right then and there, you could miss it. If you miss it by 30 seconds, it could be gone. Whereas
Right.
now my entry time frame's on the 1 hour. So, a lot of times I can be chilling, playing some music, scanning the charts, setting up my alerts. So I kind of like that pace a lot more, and I've been really enjoying it. I think yeah, I actually just I had my I think this week was my second biggest week of the year trading, and that was awesome. So it's definitely I've seen some improvements in my swing trading as well. For yourself, what time frame do you trade? What kind do you look for a particular setup? Are you more of a we James and I talk about this a lot. Are you more of a systematic trader or are you more of a discretionary trader where you kind of come up with a thesis and say, "Hey, I think, if we retest this level, it's time for me to get long." How do you go about what's your approach?
I think if I had to give one answer, it would be discretionary, but I would say it's a mix of both. Like, here's the thing about me is I don't have one specific strategy that I apply, and I don't have like a specific indicator that I look at. So my idea is just like everything in life. Like I come from a business background, and in business management, running businesses, whether it's like a warehouse or some sort of logistics distribution company, or whether it's running a restaurant, and I've done all of that, is that you have to the equation to like success or accomplishing something is very circumstantial, and it's based on so many variables. So I apply the same kind of concept to trading, where knowledge makes success inevitable. So one thing I do is that I will apply a specific strategy. If I might look at the market and this month apply a strategy on an asset, and then next month the strategy might be completely different, only because there's different things that are affecting it, different variables, whether it's politically, because these things do affect like the price action of things, whether it's oil, commodities, gold, whether it's cryptocurrency. So discretionary, I'd say. I'd have to really, before I trade, I sit down and I assess an asset in every single way that I can. Like the technical um aspect of it, of actually applying, like reading the charts, is pretty much like the base of the trading strategy. But I can't trade specifically based on lines, and its supports and resistances, because in my experience, they don't tell me enough, right? Because you say, okay, well, it's supposed to do this based on price action and technical analysis, but a lot of the times it ends up reversing on you. So my idea, or what I learned from like kind of losing so many trades years ago, is it's because I didn't know enough. If I knew what caused it to do this, then I would have been able to front run that. So before I trade an asset, I'll look at the technical analysis, but then I'll try to correlate it to indicators that are besides like the ones on TradingView, like the RSI, the MACD. I'll look at the indicators. Okay, what's happening politically, and how is this going to affect this asset? And what's happening, on in an economic level, globally or nationally, and how is this going to affect it? And I also see what different people are saying about something. I correlate all of that down to the indicators on the technical analysis, indicator of volume to price analysis. I kind of tie it all together, and that's how I come up with percentages of what I think something is likely to go in my favor. The probabilities are based on how much correlation can I find towards a certain thesis. So when I'm like, okay, it makes sense economically, it makes sense politically, it makes sense on a technical analysis. I'm seeing like a bullish divergence on the RSIs. I'm seeing on a larger time frame, from like the weekly to the daily, it's like it looks bullish, but maybe on the 4 hour, it might look a little bearish. My thesis is comprised based off of all of these. And I found that that tends to give me the highest possibility of success.
So you definitely take into account, some fundamental analysis, right? You're not just a price action trader, because I believe for, James and I were primarily technical traders. We trade primarily price action based. I mean, there's some stuff that trickles to me through news that I know. For example, like I knew that, Trump winning the election is likely going to send Bitcoin higher, right? Like that's a very
Yeah.
obvious thesis, but like, pretty much the whole world kind of knew that, right? But like I don't really let that sway me, but I kind of know, for example, if I'm in a position, I might decide to hold a runner for that. If I'm having a position entering into the election, I might decide, okay, I'll just leave a partial for a runner just in case this thing, blows up, right? But
Right.
for your approach, it definitely sounds like you plan out everything beforehand, and then you kind of combine that with the technicals. Do you have kind of regular sources you go to for news? Are you checking Twitter? Like, do you have regular places that you go to for fundamental analysis?
Nowhere specifically. I'll definitely look at, Twitter has become like one of the largest news sources in the world right now.
Yeah.
Right? Because you're getting your news from people, not from like corporations. So people feel like they can trust that more. So and information is shared kind of more openly on there. So X is definitely a big one. But I guess nowhere specific. It's just kind of like keeping my finger on the pulse of what's happening within a specific market, whether it's commodities or whether it's cryptocurrency. And then based on that, it goes back to marrying it with the technical analysis, right? So you talked about time frames. Like a big part of trading for me is looking at multiple time frames. So the weekly time frame is going to tell you something, and then the daily is going to tell you something that may go against it. Like if you read the TA and actually the indicators, and then the 4 hour will tell you something else. But there's a connection between them. What I found is like the weekly might show you long term, growth in an asset, maybe for the next month. And on the daily, it might show you a short, like kind of pullback. And then I use the 4 hour to kind of assess like when that pullback is going to happen. I'll know if it's close or not close based on the smaller time frames. So I try not to go below the 4 hour because it just gets degenerate after that. Like if you go into the 1 minute time frame, it's just like a degenerate place, you know? Move like weekly, daily, and 4 hours. What I try to do.
And
No.
do you feel like, is that where you enter? You enter trades based on the 4 hour time frame?
Yeah. Yeah. I enter trades based on the 4 hour. I'll use kind of like the weekly and the daily as indicators of where something's going, and then I'll try to time it on the 4 hour and sometime
Hmm.
1 hour.
So
Swing
basically,
trades.
yeah, basically you're trying to catch or ride a daily or weekly trend with a more precise entry on the 4 hour, and you're looking to ride that. Yeah, that I think that's really cool. I think multi-time frame analysis is something, is something that's a very powerful tool. Um, and I think something that I've also discussed with James, I think in a previous podcast, that did quite well, and I would love to. People love this topic. I think that it's a little bit gimmicky, but like I definitely think I. So, what are some of the indicators that you use, or like technical indicators, right? People are always wondering like what indicators do you use? Any technical indicators? Do you have some favorites?
Oh, yeah.
For James, he uses the previous day highs and lows a lot in
Mhm.
his trading. We kind of ran through that, and some EMAs. What about yourself? Is there something that, are there, let's say if you could only use two technical indicators on TradingView, what would they be and why?
Volume. Volume is first and foremost. I mean, volume tells you, I think that volume tells you more than anything else, because based on the cycles of the market, most assets tend to, you guys know, it goes into a accumulation phase, and then there's kind of a rise in price, and then there's a distribution, right? This is how the people who own like the majority of the asset do it, and then there's kind of a sell-off. You bring the price back down. So, for example, the way I use volume is like, if I see that an accumulation phase took place where something went down to like, it's one of its base, levels based on like TA, drew a line on like a weekly time frame, like, okay, we're pretty low down, we're at like incredibly strong support. And I saw in that period kind of like this consolidation area with high volume, so people are buying. If I see it go up after and I'm riding that trend, how do you know when to sell? So the most powerful indicator I found is volume. It's because usually if it's going to go up and people have accumulated, it's not going to go down until the people have actually sold what they accumulated. It's just supply and demand, right? So that's how I'll know, like, to hold on to that asset. Like, okay, well, we just experienced like a 10% dip, but there's no volume behind it. So that's an anomaly. So I'm not going to sell it yet. I'll keep it until I actually see that. So volume is the first one. And I would say the RSI is just super, super like underrated. RSI is so powerful. I use like bullish and bearish divergence to kind of assess where it's gonna go next, and it's just like it's weirdly accurate most of the time.
Yeah, it definitely is. I that was one of the first things I used to first kind of like systems I used to trade. It was all based on kind of like trading pullbacks on based on divergences. Yeah, that's really cool. Thanks for sharing those indicators. And I think, RSI definitely one of my favorites. I wanted to ask you, James, I know that you pay attention to some news sometimes, and I think that this is something that we've never talked about on the podcast actually, which is fundamental analysis, thinking about what news is upcoming. FOMC was just last night. It played out very beautifully for me. I had multiple swing positions. I woke up, all of them were closed in profit overnight, just like big FOMC candles. And I was like, oh, great. Like for once it's going in my favor. But I'll be honest, I completely forgot that there was even FOMC. Like I woke up, I saw a gigantic candle. I was like, what was this even? I looked and it was FOMC. But yeah, I wanted to ask you, James, like, do you take into account fundamental analysis, and if so, how?
Well, obviously, because I'm day trading, I'll avoid holding trades into fundamentals, right? Into news events. But definitely, as Sawzer was saying, that the fundamentals actually move the charts, right? So I think maybe being more aggressive, like after FOMC, I caught some nice moves after the print, after the news came out. But because I'm not holding for maybe multiple days, I don't, not really in my analysis. I'm aware of when they are.
Do you
and
ever
what
do you
they
ever
do.
take it into account for your thesis for the day, right? Like if certain things are happening, do you
I
ever
could,
take into account it?
I know it's coming, but I'd rather just wait for the print. Like we cut interest, interest rates were cut yesterday, but everything tanked. Normally, when you cut rates, things normally, are moving, particularly stocks are going to move higher. That didn't happen yesterday. So I always wait for after the print personally for my own trading. Yeah.
And if you, Sawzer, this one back to you. If you, do you have any advice for traders that maybe feel like they're in the same shoes as yourself, or like maybe they feel like, price alone is not giving them enough of a complete picture, right? Like you said that you had this little process of, going from only that, realizing or feeling like you didn't have enough information to now it seems like you have almost a system built around, both the combination of technical plus fundamentals. Do you have any advice for any traders in the community that want to start incorporating fundamentals? How did you start? Where did you start looking for this, and how much weight do you kind of give? Any advice that you have to give to someone that's looking to get into this would be great.
Okay, so I guess my answer is going to be a little more philosophical or like business minded. But what I found is that when it comes to success in anything, whether it's sales, whether it's business, or whether it's trading, is that success is a formula. So I put it like this: if I lose at anything, I'll think to myself, if there's something, if I knew that thing, or if I did that thing, I would have won. Right? And that's a what if that's really powerful for me. So what I was lacking was that thing, that one thing that if I knew it, I don't know what that thing that I should have known is, but what that tells me is that knowledge is power. So the more you learn, the more you're going to increase your chances of success in trading. So if let's say you're opening sets of trades, right, and you're trading consistently and you're in profit, but you're at like a 60% positive rate and 40% of your trades are negative, there is a way to bring it up to 70-30. That's just what I believe. That way is learning. So the more you research, the more you study, the more you learn, the more you're going to increase your chances of success, because it's just like a variable, right? It's like a math equation. So imagine, you're in a room and you're all baking bread. I don't know. And there's one guy who bakes the most perfect cake. And whenever you're using the same exact ingredients as him, but for some reason, when you try to bake, it just comes out like trash. So at that point, you have to sit and watch him and be like, okay, what am I doing wrong? So first, you study his behavior and be like, all right, first of all, he's using different like percentages of the ingredients that I am. Okay, so I gotta cut back on this ingredient. I gotta pay more attention to this. And then you increase it. Right now, your cake is a little better, but it's still not good enough. They're like, okay, well, this guy's leaving it in the oven for 5 minutes. I'm leaving it for 7. It's coming out too hard. So it's like this in anything. So the way that I increase my chances of success in trading and kind of like, as well as the profit margins, has always been a question of just learn as much as possible. Like that's where the patience applies in trading to me. It's not so much like during the trade, there's patience in there too, but it's mostly like just having the heart to just sit down and take so many hours of your life to just learn as much as possible, you know?
Mhm.
Yeah, I like
I
I
think
like that
your
analogy.
Yeah, I think your analogy there is spot on, because when we first start trading, it's all an experiment, right? It actually is very much like baking a cake. You're throwing different ingredients in there. You're trying to, oh, this one tasted so bad, that one's not working. And then you also look at other people around you, right? Like you're like, okay, cool. Maybe you watch someone do a TA breakdown. Maybe you're in one of James's live streams and you notice the way that he approaches, it could be anything. It could be anything from like his morning routine with his 1 hour ice baths, to
To my haircuts.
to to maybe how he, for example, he only waits for the newsprints, right? Like maybe that's something that you were sometimes maybe trading news or getting involved early, getting stopped out big time. You start to notice other traders who are in the space who are doing certain things, and maybe they have certain rules, and you take those and you adopt it, for yourself. I think trading is definitely it's a very personal, individualized game.
Mhm.
That's part of the beauty of it, right? Because you can trade one way, James can trade one way, I can trade one way, we can trade on all separate time frames, and James could be long a pair, I could be short a pair, and we could both make money, right? That's the
Yeah.
beauty of trading. That really is the beauty of trading. You find your edge and what you're looking for in the market. I think what you've said, about that learning journey is a very beautiful analogy. So, thanks for sharing that with us. Uh, and I do have another follow-up question, to this like learning phase, um, you know, is how long did it take you to go from, this point of failure, not enough, to the point of like, oh wow, something's clicking, it's starting to make sense. This fundamental analysis, like factoring in news, is starting to make sense. How long did that take? And did you have any, inspiration? Do you have any light bulb moments along the way? Maybe someone inspired you, or maybe a video or something like that. Were there any of those moments along the way?
Yeah, absolutely. I'd say one of my light bulb moments was volume. When I understood volume, like the impact of volume. it just tells you so much, you know? It gets you to see the market in a different way. It's not just lines moving and everything is random. You start to understand that there's a story behind it. Like you see a bar, one of the candles go up like an incredible amount, right? And then the volume is low. You're like, that doesn't make sense. It's an anomaly. So that can tell you a story about what's about to happen next based on why it happened. So
So there's almost like volume divergence, right? Like price pushing up, but volume maybe starting to die off is maybe like an indicator for you.
yeah. So then at that point, that light bulb moment for me was like the market is kind of like telling me a story. Like when I watch the lines and the charts and the indicators, there's a story behind it. It's not just lines. So for me, it's just like being able to interpret, okay, what's happening now based on those indicators. That was a light bulb moment for me. So volume did that. There's a really good book. It's called Volume Price Analysis by, what is it, Anna Culling or something? I have it here actually. I can refer yours to it. It's called Weekly Guide to Volume Price Analysis. That's right, Anna Culling. I got it right.
Nice.
So this is a good book for anybody who wants to start trading. I or is trading. I suggest you read this and you start there. Um, yeah, I'm not sure what your previous question was.
Like I was asking if you had light bulb moments, and then before that was how long, like how long was the process of you knowing that you didn't have enough, experimenting, tinkering with things to the point where you're like, oh wow, like I'm able to pass one of challenges, I'm able to make payouts. How long was that process? Because I think that's a lot of beginner questions ask this. I'm sure James, you get this too, and look at me. How long is it gonna take for me to, like start making money on the market? So how long did that process take you?
I'd say it took me 4 years to feel like very confident in my trades and in my methodology and in my systems and in my strategies.
Yeah.
You know, in the beginning, you lose a lot more than you win, and you
Yeah.
lose more, you blow up accounts. But then, as you figure out, how to increase your chances, eventually you get to like a point where you just refine your system down to a point where, like, if I just follow the system, I'm 75% in profit. Like 75% of my trades just work. So even when I lose a set of trades, I'll be like, so what? You know, I stay very logical and just reapply the system, reanalyze, reapplied. So it took 4 years, but like on and off, not like everyday trading. Kind of like I'd trade for a few months and then I'd go do something else and then I'd come back to it. I could have crunched that down to a year if I like really sat down for a year and did nothing but focus on this. Yeah. It just depends on how hard you're willing to work, I guess, how much you're willing to learn, condense that time frame down. But for people like a lot of beginners who are looking into getting into trading, I suggest just don't two things. First of all, don't start with like $1 million account on Hydra. You're not gonna win. You're gonna lose it if you're new to this. Start lower. Or, start open a $45 account for $5,000 and learn there. And then the more confident you get, the more you can kind of risk. And the second thing is about risk. One of the most important things I've learned is that you don't set your trades, and it's kind of a fundamental of trading based on how much you can gain, right? And that's like the OG beginner mistake that we all made. Like you get excited and I want to make this money. It's the trades should always be based on how much you're willing to lose.
Yeah,
Yeah.
I think that's a great way to put it. I think that's the best way you could describe risk management, right? If you could describe risk management in a way, it's like don't think about how much you're going to make, because how much you make is predicated on risk reward. There's a reason why risk comes first in risk reward, right? It's
Right.
not reward risk.
Yeah, no,
Because
absolutely.
any good trader worth anything knows that risk management is the number one most important thing, which actually brings me to the next question, which I really want to know. What is your risk management strategy? And I'd like to know also from James, from both of you guys, seeing as there's vastly differing trading styles here, but I want to talk specifically about prop challenges. All right, specifically for challenges, not about your personal accounts. What's your risk management strategy when it comes to these challenges, and especially with your approach to this challenge plus the funded accounts? Did you have the same risk parameters for the challenge and the funded account, or was it different? How did you approach the risk game?
So it's always different for me. So like a lot of the time, my risk is based on my level of confidence in my thesis. If I'm like, 60-70% chance it might go my way, but I'm seeing a lot of like discrepancies, like weird things that's going on with the indicators that I don't fully trust, I'll risk a lot less. But when I'm like super confident, I'm like, this is crazy, like everything's telling me the same thing, I'll risk more. But you should never really risk more than like a few percent of your account at a time, honestly. I mean, in a set of trades, I don't know, a rough number, I wouldn't risk like probably more than 10% of my account, like in a whole set of trades at a time, even in swing trading at a time. If I have $100,000 account, typically I won't want to risk like 10K on it. I'll want to risk down like 2, 3,000. All of the trades fail. So 2 to 3%, maybe 2 to 5% is kind of like the parameters. I try to stay with it.
Mhm. And did you, because on the prop side, right, that's pretty aggressive, right? Because you got a max drawdown of like 9% or 6%, before you fail a challenge. Were you like taking that more aggressive approach? Were you okay with saying, okay, maybe this trade doesn't work out, I don't pass challenge, but I can try again. But if I have something work out, that's just gonna take the account all the way. Was that your mentality and approach to the prop challenges?
Yeah. Uh Yeah, it's a little circumstantial. It's kind of like so that set of trades that I put in where I kind of closed out like that 50K in profit, that was very aggressive trade. It's like very aggressive trade. There's two things. One is I was very confident in my thesis because I've been watching that chart for like a year. I've been assessing it for a year, just waiting for my opportunity. It's like I got a green light on so many things that I was like, dude. The second thing is I'm like, all right, if I blow up this account, I'll just buy another one. I'm not gonna lie, it's not good practice, but I'm like, I got money on the side. But I'm like, exactly. The reward was like, all right, so I might lose $1,000 or like 750 if this doesn't go my way. I'll buy another account to try to unlock it. But I'm gonna go aggressive because the reward is like, what it was, which is
Yeah.
like
So essentially, you were looking at a reward of like 1 to 50, right? Like your potential, you took that account up 50%. And if your confidence level is high and the risk reward, let's say maybe you didn't even expect it to go 1 to 50. Maybe you were expecting a 1 to 20, even though 1 to 20 is kind of worth taking a shot, right?
right, right.
And James, yourself, I know that first of all, congratulations to James. He recently, I think in the last month, past FTMO. What was the account size on the FTMO?
350. I got 350Ks. Yeah.
Nice.
So
Yeah.
congratulations to James on those accounts. You want to share a little bit about how your approach, because I know that James also likes to go aggressive on the challenge phase.
Yeah, 100%. I think I like what Sawzer was saying about being aggressive when you're confident, and particularly because he's swing trading, right? So you're probably not getting, like for me, I could take maybe a trade or two a day. Whereas like maybe on the Bitcoin trades, he's maybe getting maybe 2 a week, or 3 a week. I don't know, depending on what the market's doing, right? But again, for me, 100%. I used to trade so I've been trading personal accounts since the beginning. I still trade personal accounts. I'll be a little bit more aggressive on a personal account because you don't have drawdown limits and all that type of stuff compared to prop firms, right? But I definitely, what I do now is I actually buy small. I used to buy like 200K, 300K accounts. What I do now is I actually buy 50K accounts. I'm aggressive on the challenge phase, and if it takes me 3 times to pass it, I know that once I get funded, I'll make my money back and some. So I'm more aggressive on the challenges. Sometimes I'll risk the max steady loss limit on the challenge phase, and then if I fail, cool, I'll just go again because I'm putting in what I'm can afford to lose. I'm not going to go trade with, just go blow through everything unnecessarily. But I do agree with particularly using prop firms as a leverage, right? And if you have, let's just say you've got 10 grand to trade with, you're not necessarily going to be able to get a 50 grand payout. You're going to have to take that 5 times compared to you got 100k with Hydra, and you got more leverage to trade with. So use prop firms to actually diversify risk into other avenues, other business ventures. So I definitely think that using prop firms as a leverage and being aggressive is the way that I'm kind of seeing it myself in the last 6 months to a year. Yeah.
Yeah, I love that approach as well because today Cam and I, we just did an interview for fundedtrading.com. They wanted to do a founders interview with Hydra. We recently won an award from them this year for most innovative prop firm. They wanted to do an interview around it, so we just did the interview. And one of the things that Cam brought up was in his 20 years experience, with trading, he has never had the goal of letting trading be his sole source of income. And one of the things that you guys said, Sawzer said, hey, I have cash on the side to load up if I need to. And James as well is the same approach. He's like, I got cash on the side, right? I've built my business, I have other income streams, so I can get aggressive and I'm not scared, right? Like I'm not scared of losing this account because that I'm not going to hesitate when the right risk reward situation pops up, right?
Yeah.
For Sawzer, it's, he's been watching this chart for a year. He knows the Bitcoin cycle is coming. He sees a prime opportunity. He's going to go in hard on this opportunity. And for James, he's more of a day trader side. So he, instead of risking big on, one big account, he's taking multiple chances and he's taking bigger risk and more aggressive to get that funding up, right? But what's the commonality between, both of you guys and exactly what Cam said is, you can't be trading with money that you need, right? That's going to make you scared. That's going to make you hesitate. And that's one word of advice I have to all of you guys out here who are considering, taking prop challenges, taking trading to the next level, is look at someone like Sawzer who's made the top payout of our entire year, right? Look at his approach. Firstly, how long he's taken, how long his journey was. I'm really glad you said 4 years. If you said like 4 months, I would have been like, oh shit, like I can't use this as an example. But he took he took a long time, right? 4 years honing his craft. Another great positive was he's not just here like relying, hoping that this one trade's gonna sort out his life, right? He's got other things on the side. He's got businesses. He's from a different background. He's using trading. That's why he has trading's almost sounding like a passion and an interest, right? Especially with like cryptocurrency and stuff. Having that separation allowed him to be aggressive with this funded account. He wasn't sitting there scared, when the time was right.
Yeah.
He was there. He knew it was time to get aggressive on a trade. He put on the size that he wanted to put on. He was okay with losing the account. Why? Because he had more bullets left on the side, right? If this is your only shot, you are never going to make it. And that's the one word of advice I think, a lot of traders do need to hear is, don't think about this fantasy of like, oh, like I'm gonna get funded and I'm gonna quit everything, I'm gonna tell my boss to fuck off, and I'm just gonna trade and no one can tell me anything. Actually, I don't think that's a great approach, because that's putting a lot of stress on your trading, and that's gonna put a lot of stress on your performance as well. And I don't think that's the right way to go. Yeah, I think we're just coming up on James's hard stop. James, I know you got somewhere to be, and Sawzer, I really appreciate all the insight that you've given us today. Little plug at the end. I'm gonna ask a question just for Hydra, just for the Hydra side. So you requested this withdrawal 45k. How long did it take for you to get paid out?
Okay, so major props to you guys and congratulations on winning the award. Because you guys are truly innovative. I mean,
Yeah.
didn't take long at all. I don't even remember. What was it like? Was it like a day? Like I think I got paid out in like a day, So yeah, super high. So you guys are like, much appreciation. Much appreciation. I mean, you've given people a platform to do something amazing in. I think it was James that said it. It's basically like a form of leverage, but it's so much
Yeah.
more like safe and secure. Yeah, I mean, it's easy to get in. It's easy to like buy the account. It's easy to trade with it. It's easy to cash out. Everything is just so straightforward, so simple to understand. No like weird stuff going on. No, everything's so like clean, and it works quick too.
Awesome. I know I had to ask that because I know we make it out fast because we always do. You know, and once again, thank you for joining us today. Congratulations on your payout. I know you're working on a $1 million challenge currently.
Yeah, so yeah, I took that 34K, and one of the first things I did is I bought the $1 million account with like the weekend trading and the 90%, keep 90% of it. So it was about 10K to buy that, but man, I'm excited. So I'm currently working on unlocking that. So if we can make an agreement, if I unlock that one and then I go on to hit the record for 2025 in that account, then you got to have me on the podcast again.
Oh, if you pass that challenge, we're gonna have you on the podcast again, because we gotta talk about that for sure. We've had 2 traders now pass the $1 million count this year, so hopefully we'll see you on that list, and I'd love to have you back on the podcast, my brother. We're gonna let James go. I don't want to drag this on for too long, but this was an
No, it
awesome
was great chatting.
awesome
This has
show.
been good. I've wrote down
Yeah,
some notes.
this
Cool.
is this has been amazing. Thank you guys. Thank you for everyone. Thank you to everyone for tuning in to today's podcast. I hope this was inspirational for you guys, and we'll catch you in the next one. Peace.